Should we buy or sell coffee? First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go to natural resources and we will look at one of the softs, and that is coffee. So 92-ish% here from the 52-week low and pretty close here to the highs. So let's start with the big picture. So these are weekly data points, and we go way back here to actually, the late 1970s. So you can see that throughout the history of this commodity, it moves in these waves, up, down, up, down, up, down, up, down, up, down. Huge, trading range. Massive spikes, massive sell-offs. Great for bulls and also great for bears. And we can see that within this major multi-decade trading range, we are at the high end of the spectrum. To make a new all-time high, that would be a 30% upside. If we were to revisit the lows of the range, that would be a minus 83% downside. So that's the basic setup, as far as a risk reward based on the trading history of this commodity. So yeah, we are at a high level. The bulls are in control. So these are weekly data points. Let's jump to the dailies, and we do see a little bit of a pullback, but overall, clearly bulls are in control, which means we then have to ask ourselves the question: what is best from a risk-reward standpoint, to go bullish now or bearish? Obviously, there's also there's strategies in which you can benefit from both directions, but that becomes a bit more fancy. Okay, so here is the RSI. So from an RSI standpoint, we are at an extremely high level. The previous time we had a high RSI like this, it was back here, and that led to a huge sell-off. When we go further back, we have this situation here where RSI was extended, did get a pretty substantial bear market. If we go a bit further back here, you have this situation, major spike, and then we have that super bear market. So looking at the RSI here, this level historically has not been beneficial for the bulls. Looking here at the MACD, throughout the history of this commodity, this is definitively at the very high end of the range. So given the history, if we were to turn bullish here, we don't really have the right, quote unquote, to expect that much more from that indicator either, because the history is pretty clear. Unless something abnormally bullish happens that is way more bullish than what we have seen in the past, then the current setup favors the bears. And also the same thing here with the PPOs. Extremely high readings on the weekly data points. On the daily data points, RSI and the PPOs, very high readings that have a historical tendency to be followed by pullbacks. Looking here at the correlations. So looking at the weekly data points, 87% positive with the S&P 500, 73% with the agriculture ETF, the DBA, and 97-ish with the coffee ETN. The Joe ETN is a good alternative for those who do not want to dabble with the futures. 46% negative correlation with the dollar index. On the daily data points, which is shorter term correlation, 88% positive with the S&P 500, 83% with the agriculture ETF, so actually lower than the S&P. And then we almost have a perfect correlation with the Joe ETN. That is interesting. So historically, given the data we have, the Joe has been a good way to get exposure to coffee. The correlation with the dollar index is actually very high historically. It tends to be much lower. It's currently at 87%. When we look at the seasonality for coffee over the last 5 years, you see that November tends to be the super month for coffee, but then December is 50-50, then January is one of the weakest months. Looking at the average loss for January, it is the biggest average loss, for a month, minus 3.1. Over the last 10 years, December is one of the weakest months. January tends to produce a loss. Over the last 20 years, sharp decrease in strength from November to December. January, around 50-50-ish, percent of the time it closes higher than it opened. And here is the ETN I talked about, Joe. It's iPath Series B Bloomberg Coffee Sub-Index Total Return ETN. So that's a great way to get exposure to coffee without getting into the futures market. And the great thing is that the correlation was super strong, almost perfect. And that is what you ideally want to see with these kinds of ETNs and ETFs, when you compare it against the futures. So taking the evidence together, I think the technicals pretty clearly told us that even though the bulls currently are in control, the long-term history for coffee is that, there's more reasons to expect downside than further upside. Given, the multi-decade trading range coffee has been in. So unless something highly abnormally bullish now is happening in the coffee market, that is a complete game changer, then, there's more reasons to expect downside than further upside. The seasonality pushes us further in a more bearish direction. November, tends to be very strong, but then December is significantly weaker. I think that, the message here is pretty clear. There's more reasons to expect profitable opportunities for bears than bulls given the current readings, and that's what matters. It's all about, what is most likely going to happen given the current situation. The recent rally has only been, beneficial, of course, for those who were able to get into coffee at, a low level. Anyone considering a new position in coffee have more reason to consider shorting than going long. But always, of course, you do want to use a stop.